Oh, cool. People keep coming in. Some 130 people are registered. Usually a little less than what registers actually show up, but we'll be recording all of this so that we can get it out to the people who wanted to come but weren't able to. Oh, looks like Colin's here. Hi, Colin. Hi, Chrissy. All sorts of people. Oh, Rex Halling. Good. I'm glad that Rex is here. Rex is going to be on the chat and will be answering any questions. Although Rex didn't know that until I just said it. But the thing is that he probably knows more about projections than I do. So I'm glad he's here. Let's see here. Who else? All sorts of people here coming in. Hello, Mark, Matt, Joe. Kathleen, good to see you again. Jonathan. Everybody's just kind of trickling in. So Ryan will also be on here answering questions. Ryan Kelsey. As things come up more related to the administration of everything and where the things like where the recording would be posted, that kind of thing. All right, it's 10:30. Expecting a lot of people to come in the next couple of minutes. I usually wait a couple of minutes just to let people assemble. Mark Schlesvies, welcome. Good to see you here. Shauna Blakeman, good. Oh, Sharon Simpson's also here. Hi, Sharon. Sharon's another one that's going to be answering questions in the chat for everybody, along with Rex. Again, I just sprung that on her in front of all you guys, so. Will Hip, Will, welcome. Ha, that's right. I'm excited to see your joke punchlines there, Sharon. I was kind of hoping to get Monty Anderson on here so that we could get some of his jokes going, but I don't see him yet, unless he's signed in under a fake name. He does that sometimes. Tim Emmerich, welcome. Wish I could see everybody as they come in, but I know I'm missing a bunch of you. We're at 56. I'll give it another minute or so before I dive in. Yes, Scott, it is being recorded. So good question. This is being recorded. We will post it to the website so that everybody can see it afterward. Hello, April. Oh, here's Ania too. Hi, Ania. Amanda Smith. Great. This is awesome. All right. We are at 33 minutes after the hour. I still see people coming in. So we'll go ahead and get started, and hopefully everyone who is able to come will trickle in over the next few minutes. I'm going to go ahead and start by sharing my screens. Let's do it here. Okay, cool. So you guys should be able to see my screen here. And I think I can put myself down here in the bottom. There we go. So that you can see it. Perfect. All right, projections webinar. Welcome to the projections webinar. We're going to be talking about cost projections inside of Vista. We're going to be talking about a few different things here. Briefly, our agenda is as such. Let's see here. Agenda. Number one, we're going to ask the question and hopefully answer the question, why do we do projections? Always good to know why we're doing what we're doing. The second thing that we're going to be doing is we're going to demonstrate how earned revenue works. Earned revenue is one of the concepts that I feel like all project managers should know when they're looking at their projections. This is something that is usually reserved to CPAs and accountants, but I feel like it's a really good concept for all project managers. Next, we're going to do a whiteboard overview of how the contracts and projects are set up inside of Vista. Just so that we have a little background information. This will be a review for a lot of you. 4, we're going to do an overview of how projections work inside of Vista. Again, this is an overview on a whiteboard, and then we're going to jump into the meat of things, and we're going to do some projections themselves, which include the setting them up, so the setup, and we're going to be doing the cost projections and the revenue projections. And then if and only if I can stop my mouth from running for too long, we're going to leave some times at the end for questions and answers, which is actually my favorite part of the whole thing. Note that there's no reason to hesitate to ask questions. We have the chat open and available for things. For those of you who are brave enough, I welcome you to jump in, unmute yourself. You can even turn on your video camera and ask a question even during the session. I would love questions. I won't be able to go through the chat as we're actually going, but if something comes up that needs additional explanation, or if I say something wrong or anything, feel free and unmute yourself and ask the question right then. Also, Ryan can jump in and ask me the questions if it does come through on the chat. All right, so let's go ahead and get started with the why. Why do we do cost projections? Well, first of all, the main reason, the primary reason that cost projections are a thing, and I would say revenue projections or projections in general, is that by projecting our cost and projecting our revenue, we allow project managers, of which many of you are project managers who are here on the call, we allow project managers a tool that gives them control over margin on their job. So one of the things that we're doing is we're basically saying when we're doing a projection, we're re-estimating the job. We already estimated the job once before we won the job, or at least most likely, and now we are going to be estimating the job again now that we're partway through it. And the idea is that through that estimation, we can see problems before they end up impacting the financials. That is, we can see them when they're still on the projected final cost. We'll be going into that quite a bit. So this is a tool, the projections is a tool that gives project managers the ability to control their margin. Second is that through the earned revenue, and over under billings, etc., and the WIP, that projections give managers, it allows business managers valuable and readable financial statements. So some of you guys are CPAs that are on this call. I won't call you out because this is a group of project managers and they'll reject you from their midst. But the this is using a work in progress schedule and using the WIP to post over under billings, right? Controllers in your company, the accountants in your company, they're used to doing this. But it's important for you as project managers to know that the result of your projections ends up on the WIP. The WIP ends up influencing the income statement, and it's the income statement that allows the business managers, that is your bosses, to make business decisions about the company. And without good projections, they cannot make good decisions about their company. And so this is the second reason why project managers should be doing projections. First is it allows them control over their job. Second, it allows their bosses control over the company as a whole because it gives them readable and valuable financial statements. And then third, through this same WIP and the over under billings, it allows the company to get credit. So this credit usually comes in the form of bonds from a bonding company, or in the form of a line of credit, or in loans, specific loans like equipment loans and that kind of thing. And so you have to have what is known as GAAP, GAAP, generally accepted accounting principles. We have to have GAAP financials in order for those companies to trust our financials and be able to be willing to extend credit to us. So that's why we're doing projections first. For yourself, make sure that your job's making money. If the jobs aren't making money, the rest of this doesn't matter. Second, we have to make sure that the company has the ability to manage itself. If the company isn't managing itself, then we don't care about GAAP financials. But third, we do want to have GAAP financials once those first two are taken care of so that we can go out and we can get banks and bonds to give us the capital we need to continue operations. Okay, so this right here is an important concept. Through earned revenue, I said, we allow business managers valuable and readable financial statements. So what is earned revenue and why do we care as project managers? Why do we care what this is as project managers? Well, in order to demonstrate this, we need to talk a little bit about jobs as a whole. So let's take this graph, and on this graph, we're going to say over here, cumulative dollars, both revenue and cost. And on this axis, we're going to say time. Time goes marching on. At the beginning of this time graph, we're going to call this here the inception of the project, and right here we're going to call it completion. By the way, inception and completion are just fancy words that make me sound smart. That mean beginning and end. At the inception of the project, beginning of the project, we start to experience cost, and the cost climbs relatively smoothly, especially for you guys who are in labor-intensive environments. Every week we pay people. Every week we experience costs. They come in. Of course, it isn't always this smooth, especially when you guys have large subcontractors on jobs. Sometimes your subcontracts will end up being kind of herky-jerky, but we're going to say that in this case it's kind of smooth. Let's just say at the completion of this job, we have $100,000 that we are going to spend. Well, this job happens to fall over a 3-month time period. Okay, so we have November here, we have December, and we have January. And what happens is that we're going to bill once. We'll just go ahead and say we'll send in a bill for $75,000 here at the end of November. And then Christmas comes and we forget about billing because we're too busy opening our presents. And then we bill the remainder of the job here, $75,000. And in early January, cost continues to trickle in, but we finally finish it up. And at the end of the job, we've billed $150,000. Note here that the profit on this job is $50,000. One note, this gets people confused. Sometimes we have a margin on this job, which would be $50,000 divided by $150,000, right? So our margin on this job is 33%. We have a markup on this job, which is $50,000 divided by 100, our cost. And this means that we have a markup of 50%. And a markup of 50% is the same as a margin of 33%. Please note that most of the time accountants and business managers talk about margin, while most of the time estimators and project managers talk about markup. And if you say as a project manager, oh, I got a 50% markup, when you really were saying you had a 50% margin, you'd be talking about a very different thing. Markup and margin just have a different denominator there, if you recall your high school math. So back to here, we have a $50,000 profit. You can see that at this on this job that at the end of November, we had billed $75,000, but we had only spent $33,000. At the end of December, we had spent $66,000, but guess what? We had still only billed $75,000. So what happens here? Well, when the accountants are preparing the income statement for the month, let me make this a little bit bigger. When they're preparing the income statement for the month, one of the things that ends up on there is our billings. And our billings were $75,000. And then we get our direct cost on there. And our direct cost in this case was $33,000. This allows us to see what's called gross margin, which is only the word for all of the costs, or all of the revenue minus all of the costs associated with jobs. In this case, right, we can see that we have $42,000 gross margin. Well, if we were to do this again the next month, and we were to produce December's financial statements, we would have billings at the top. And let's go look, how much billings was there? Oh, there was none, 0. Bummer. How much cost do we have? Well, we went from 33 to 66, so we have direct costs of 66K. That gives us a gross margin of negative, oh, I'm sorry, I did that wrong. Let's rewrite this here. Direct cost of 33, because 33 plus 33 equals 66. Our gross margin is negative 33K. Our gross margin at the end of December, hint, hint, it's right when end of year bonuses are happening. Our gross margin is negative 33K. All right, then what happens the next month? If we were to do this, right, we have the final billing of 75. We had the cost continue to trickle in, 66 to 100. That's 34. Maybe at some point we have to round the other way, right? 34, and our gross margin here. Gross margin is 40. 1, right? So we have this good gross margin, good financial statements in November, are a terrible one in December, and good ones in January. Well, so once upon a time, back when people were still talking in Latin and debits and credits, they said, hey, this doesn't make sense. Let's, instead of putting billings on here, let's do something called earned revenue. And so they drew this imaginary line that followed the cost curve, so it does the same thing as the cost here, but it ends up here at the end of where you project your revenue to be. This line here is called earned revenue. And basically what we're doing is we're applying our margin to our cost at the end of each time. So what do we do here? How do we get this earned revenue? Mathematically, what we do at the end of a month, which is a rather arbitrary thing, we say, how much of our cost have we experienced? Well, in this case, 33,000 of 100,000. So that means that our percent complete equals 33%. And then we take this 33%, and we multiply that by our total revenue, $150,000. We get an earned revenue of $50,000. So this line right here is $50,000. Well, you can see here that we've actually billed 75. In this case right here, the difference between 75 and 50 is a $25,000 overbilling. This is over, right? That kind of makes sense. It's like, hey, we've only earned $50,000 because we're 1/3 done with the job, and we billed for 75 or half of it. We're overbilled. We billed in advance. This is good, by the way. Bill in advance. It's good to use your customers' money if they're willing to help fund the following month. In this case here, you can see that we're at 66%. Sorry, $66,000 done. In order to calculate a percent complete, we're going to take 66 as a percentage of 100. This happens to be, our percent complete happens to be 66%. And now we take this 66%, we multiply it by our revenue, 150, and we get our earned revenue at the end of the second month of 100K. All right, our earned revenue at the end of this is 100K, so that's going to be right here, right? And so now you can see that since we've only billed 75, but we've earned 100, now we're $25,000 underbilled. So here we were overbilled, here we were underbilled, and then we can go and make our adjustments. And I'll spare you all of the details, but let's just say that here we're going to do a over/under billing adjustment of -25. And here we're going to take this -25, which we lent to the next session. So this is +25, which comes from here. And then we're also saying we need to have an additional 25 because we were underbilled there. So we're going to have another 25 for a total of $50,000 over/under billing adjustment. And then in this month, end of January, we're completely done. There is a zero. I'm sorry, that's not correct. We're going to take this $25,000. We're going to take it from the following month, -25 here. So our over/under billing here is going to be reducing by 25, just like it was in November. And now we can calculate our gross margin much more accurately. Here, $17,000. 75 minus 25 is 50, minus 33 is 17. Here, 0 plus 25 plus 25 is 50, minus 33, 17. Here, 75 minus 25 minus 34, 16. So now instead of this herky-jerky, lumpy-dumpy billings, we have nice, simple billings based on our earned revenue. Okay, all of you are going, we came here for projections. Why are you talking to me about accounting? Because this right here is what your year-end bonus is based on, and they can't get you that number unless you do your projections. Earned revenue, the earned revenue number here is based on your projection of how much you're going to spend and how much you're going to earn. So if you don't do a good job of that, they can't do a good job creating the income statement. If they can't do a good job at creating the income statement, they can't make business decisions. So do good projections and have a Merry Christmas. All right, Next thing here, we need to jump into how projects are built inside of Vista. So this should be review for most of you. This should be review for most of you, but just in case, just remember that projects really have two different parts. There's the part that has the revenue and the part that has the cost, and never the twain shall meet. Well, that's not quite true, but they're kept very separately. We have our PM contracts, and our PM contracts hold our revenue, and we have our PM projects, and our PM projects hold our cost. Inside our contracts, we have all of our contract items. This is known in the big wide world as our schedule of values. If you can read the word schedule there, more power to you. And then the projects is broken into our phases, and our phases are broken into our cost types. All right. So, all right, that's fairly standard. We build these two things inside of Vista. We put in our contracts, all of our contract items, and the sum of all of our contract items is how much money we're going to make at the end. We have all of our costs, and all of our costs is the sum of all of our costs is how much we're going to spend at the end. And of course, the difference between these two, 100K here, say, and 150K here, the difference between this number and this number is our 50K or 33% margin. All right. So diving into costs a little bit more here. What makes up our costs? So if I was to take these phases and I was to list them down the side with their associated cost types. Now, cost types are generally things like labor, material, subcontractor, equipment, and other costs. As people will have things like burden in there. Some people will have a bunch of different cost types depending on the type of business that they have. How are costs thought of inside of Vista? Costs are thought of in terms of to what time period do they apply, generally speaking. The first thing that we have inside of Vista is our original estimate. Our original estimate is the cost that we expected to experience when we bid the job. The cost that we expected to experience when we bid the job. This is our original estimate. Sometimes this is known as conforming the estimate when we take our estimate, which is a spreadsheet or heavy bid or one of the other AccuBid, one of the other estimating softwares out there. We put it all together and we import this or type it into Vista. This is our original estimate, what we thought we were going to spend when we bid the job. Then we get to add change orders to our job, and of course those change orders add cost to our job. The difference becomes our current estimate. So any cost associated with change orders gets added to our original estimate, and then we have our current estimate. Next, we have what are known as our committed cost. Committed costs generally only show up on our materials as purchase orders and our subcontracts as subcontract themselves. Occasionally you'll see on other costs. This is our committed cost on the job. This is cost that we're committed to spending in the future. So we've written it's our purchase order or a subcontract that goes into our committed cost. Next, we have our actual cost. Sometimes this actual cost is called cost to date. The actual cost is the cost that's experienced in an accrual system when you were billed or when you owed the money. The cost that is actually experienced so far on the job, and then we get to the one that we're all here for, which is our projected cost. This is the cost that we expect to spend as project managers with all of the information that we have. Now, if you had perfect estimators at your company, then this projected cost would equal exactly your original estimate. But you don't have perfect estimators. I promise I've never met one. If you have one, please raise your hand. We would like you to speak for the rest of this time. Since we don't have perfect estimators, as project managers, we need to sit down and we need to rebid this job. Now, in my example above, this was a nice, clean job. $100,000, $150,000 billing. But of course, that's not what really happens. What really happens is that when you get done with $33,000 worth of cost and you sit down and you do your projections, this $100,000 might go up if the job is going badly, and it might go down if the job is going well. And of course, if we're adding in things like change orders, the amount that we're going to bill the customer might go up, or it might go down if they're value engineering or something like that, deductive change orders. So we have the possibility at the end of November to use the information that we have so far. Is the job going well? To enhance our projected cost, our projections, cost and revenue, cost at the end. And of course, as the job chugs along here, as we go further along this axis here, the more information we have about the job, the better our projections can be. So if I scroll back down here, our projected cost is the cost that us as project managers expect to spend at the end. All right, so how do we actually do this projected cost? Well, inside of Vista, we have the phases and the cost types. What we do with these phases and cost types is we combine them into what are called PM projection codes. Now, if you're unfamiliar with projections inside of Vista, I recommend that you do your projection codes based on your phases. That's what I'll be demonstrating today. However, you could also group your jobs into things that make more sense for you. I've seen people use, instead of phases, they group it by cost type. And many times people who are coming to the project management projection module, and they're used to doing it in the job cost projection module, they'll be more familiar with the PM projection codes if you do it by cost type. It's more detail. It's a lot more busyness on the screen, but that's what they're used to seeing over on the job cost side. And hey, it does show everything there. The other way that I've seen a lot of people do it, especially people who are working on Department of Transportation projects where they're unit-driven contracts and their phases match one-to-one with their contract items, is they actually group them according to the contract item itself. So they group all of their phases, all of their cost types under contract item, and they project both their cost and their revenue in groups according to their contract item. But basically, this is combining all of the phases and cost types on our job into groups. Combine into groups. And Vista allows you to do that so that you can think about your job more in a more condensed format, step through it in a different way. One thing to note, though, is that I highly recommend that no matter how you set up your PM projection codes, that you are standard across your company. Standard across the company. One of your project managers that's been doing projections for a long time, it's helpful if he can easily sit down and help another project manager who maybe has just beginning, right? So you want to do your projection code standard across the company. The other thing to note is that they often need refreshed, which I'll show you. And since they need refreshed, which I'll go through, it can be confusing, especially for those of you who are coming from the JC projections side where that wasn't a thing. PM projection codes are new in the PM module. Okay, well, cool. That was all I was going to go through on the whiteboard, and then I'm going to jump into Vista proper. But just as a review, what we talked about was we talked about why we do projections, allowing the project managers a tool that gives them control over the margin on their job. And then through the earned revenue, we allow the business managers valuable and readable financial statements through the WIP and over under billing. And we allow the companies to get credit from their bonding companies through or lines of credit or loans. We talked about how earned revenue is calculated through percent complete. This is a percent complete based on cost, and why that is important, because our revenue doesn't go all over the place, leading business owners to buy yachts some months and lay people off following months. And then we talked about how projects are built inside of Vista with the contract items, the schedule of values, the phases, the cost types, and we showed how that cost is broken into several different categories, from original estimate all the way to projected cost. All right, before I move on, everybody stop, take a breath. That was a fire hose. And ask any questions that you might have. Okay. So I am saying, are we supposed to be able to see Michael's notes? Can people see my screen? People can't see my screen? Yes. Brian says he can see my screen. Okay, cool. Thank you for responding. I see that some people were not able to see it. Ania and Estelle. Hopefully you guys were able to see that. Something on your end. Be a bummer if you couldn't see that whiteboard this whole time, because if you couldn't, all right, we got a bunch of yeses. Great, great, great. If you couldn't see the whiteboard, you also wouldn't be able to see Vista. So, okay. All right. Questions here. Alex Erickson, are projection codes the same as cost codes? No, they are not. For one thing, Vista doesn't use the word cost code very often. The cost codes in many systems, the people hear the word cost codes, and other systems use that, like so heavy job, for example, if you're familiar with that software, they uses it in where Vista uses the word phase code. So phase codes are usually analogous to a cost code. However, it gets a little bit confusing because then we have cost types, and remember that cost types, labor, material, subs, equipment, and other, those are subcategories underneath a phase code. Projection codes are a way of looking at our projection that group phase codes and cost codes together in a certain way. We're grouping them together either by phase, so that in that case the projection codes would be 1-to-1 with the phase codes, or by cost type, so then we would only have 5 or so projection codes across all the jobs, no matter what phase they're on. We would group it by cost type, so we'd have one projection code, and we'd project our labor independent, no matter what projection, whichever phase code it was on. Or we're going to do contract item, and a contract item says, okay, I want to project my cost based on how I'm going to end up billing my customer. So no, they're not the same as our phase codes, although we often create them based on our phase codes. All right. Other questions? Oh, cool. I can see that Estelle said that she got it figured out, so that's awesome. For those of you who weren't able to see the screen, Rex posted a link to a help for people who can't see the screen on Teams, and hopefully you'll be able to follow that link and grab it. At least I do know that it's getting recorded and the screens will be available. The screen will be available on the recording. All right, let's go ahead and jump into Vista proper. Okay. Here we have our beloved Vista by Viewpoint, or by Trimble, maybe it's called now. Vista by Trimble. It just doesn't have the same ring as it used to. You can see here in my example excavating company, I have the main menu down here on the left, and I have a project management module open. For those of you who are longtime users of Vista, you'll see that I have a few user folders that I've created here. If you're wondering about my numbering, well, don't wonder. I have some hidden folders, 2, 3, and 4 here between 1 and 4. But you can see that I create a few user folders. If you want to know how, you right click on any main one. You can create a new subfolder. You can see here I have them listed out, or you can just create a subfolder that's blank. I do this because in the main programs menu, I have a big long list of things, a lot of them that as a project manager, you're never going to have to worry about. But when I'm doing projections, I only have the specific things that I want to cover. I want to cover my projection codes. I want to cover my cost projections. I want to be able to use my contract analysis drill down. And sometimes I need to use my AP job and work order transactions drill down. So I've dragged these things into this folder. Note that I have two things from the programs module. Programs, I went here, started typing projections, and I just drug it into that folder. Dragged will be drugged. I also went and grabbed my projection codes, pulled it in there, and then I went to the reports folder and I grabbed the things that I knew I would need to do. My contract analysis drill down here, which we've modified slightly, we brought into our projection folders as well. I've done that with several different folders on the side here. Okay, so the first thing that you're going to need to do when you're going to do a projection is you're going to create the projection codes themselves. So if I come into projection codes and I go to a new job, so we'll just go to this job. You can see I don't have any projection codes in my 21036 job. I can come up to my tasks menu up here in the top right, and I can create my projection codes. So you can see here that these are the different ways that I'm going to be projecting my job. What am I going to be concentrating on as a project manager when I'm projecting? And like I said earlier, if you haven't done this before, I recommend just using your phases. Do 1-to-1 so that your projection codes are the same as your phase codes. However, in some cases, you'll want to create projection codes from cost types, phases and cost types, contract items, or you can even copy your projection codes from another job. In this case, I'm just going to say create projection codes from phases. I'm going to hit start here, and it's going to create my one projection code. I only have one phase in this job. I only need one projection code. That's good enough. Well, the job that I'm actually going to be working on today is 21026, and this had 6 projection codes, or sorry, six phases on it. And when I created it earlier, getting ready for this presentation, you can see that I ended up with 6 projection codes because of the 6 phases. Here on the cost type tab, if I'm clicked on the projection code number 1 mobilization, I go to the phase cost type, you can see that I have the cost types that are in here, and it will show me my original estimated cost right on this projection code screen just for verification. I can actually go in here and manually create projection codes and manually assign phase cost types to them if I want. That's definitely an advanced tactic that some people do for very long jobs where they're going to be doing projections, say like on a 3-year job or 4-year job, where they're going to be doing projections once a month for all of those 36 or 48 months. So here I have my projection codes and I have my phase and cost types here. So I created them, and then I come into my PM cost projections here. I double clicked in PM cost projections. It opens up in this screen. I'll maximize it, and I need to pick a projection date. A couple things to note when you're picking your projection date. This date is the date that it will be the cutoff for your actual cost. I recommend always using today's date. T is a shortcut in Vista in a date field to put today's date in there, 11/15, and then you put in your project number. If you hit F4 on the keyboard, it'll give you the list. I know that this is 21026, and I'm going to hit enter. The next screen that pops up is PM update projection options. PM update projection options. This is right where a lot of project managers start to shake their head and say, well, what's going on here? Well, basically, Vista has the ability to help you out in doing your projections. And Vista is sometimes really good about this, and sometimes it's really bad about this. When you're a new project manager doing cost projections, I recommend that you write over your plugged values never, and you manually go through line by line on all of your PM projection codes and correct the actual projections. Now, sometimes I see people using this very effectively, only when actual and committed costs exceed plugged costs. Well, this takes a little bit of explanation. First of all, what's a plugged cost? A plugged cost is when you, as the project manager, have gone in and estimated something previously. You've plugged in a value. You've said, my final estimate is going to be $50,000, and you've plugged it. And now you're doing the next month's cost projection. What are we going to do about that plugged cost? Are we going to override it or not? This will say, I'm going to override that $50,000 if and only if my actual costs, or actual plus my committed costs, are more than $50,000. So if I thought last month I was going to spend 50 on this particular phase projection code, now I've so far spent a total of $55,000. It's unlikely that I'm going to give that $5,000 or get that $5,000 back from refund or something. And so therefore go ahead and override my previous incorrect plugged value of 50 and put the 55 in there. People sometimes get a little squirmy with this though, because they're like, hey, I put that in for a reason. If I'm going to change it, I want to change it manually. So new project managers, just say never and continue on. As you get more familiar with this and more comfortable, play with these always, only when committed, and only when it committed exceeds plugged, but keep it as plugged. Look at those few things. Also, you can, in this, I recommend just leaving this blank. As you get more familiar, please play around with the initialize worksheet detail option. I'm going to go ahead and do an unexpected software error. That's interesting. Oh, I see. It was because I didn't select that none on that box. That was unexpected. I laugh at that box. It's like, when is a software error expected? But anyway, okay, so here we have my PM cost projection, for example, excavating. So you can see here I have my 6 codes that I had talked about before, mobilization through manhole reconstruction. And I have, if I scroll way over here, I have my projected final cost, and you can see right next to this I have my previously projected cost. My previously projected cost is what I did last time I came in here, and basically said how much I was going to spend. So this was last time I came in, and you can see when did I do this? The last time, happened to be this morning. And also I can see any notes that I made in a previous session. So let's say I added $30,000 fluff to the projection, Michael. So this was back on July 22nd when I did my first projection on this job. I was just making a note to future Michael that I was going to add a little bit of fluff because I didn't know how things were going to go. All right, cool. Well, now I have this job. I can see what's going on. And you can see here's my current estimated cost. Current estimated just means that it includes all my change orders, all my interfaced approved change orders. And you can see that I have $117,000 on this Cedar Rapids Main Street manhole reconstruction project. For example, excavating $117,000. You can see that I've spent $60,000 so far. And you can see I don't have any committed cost. I haven't written any purchase orders. I don't have any subcontractors on this job. And here's my remaining cost. 60 plus 67 is going to equal my projected cost, 128. So it came up with something here, but it didn't overwrite my previous projection, $103,000. But before I can I can continue here, there's something that's wrong. Project has unassigned phase cost type records. Project has unassigned phase cost type records. So you'll remember that when I was talking about our PM projection codes back here on the whiteboard, I said they often need refreshed. This is an example of when they need refreshed, because even though I did this projection earlier with all of the projection codes, then what I forgot was that I have actually written an approved change order and interfaced it. I have change order number 1, additional sidewalk reconstruction here on the contract side. And if I go into the projects, I have in my phases, I have 99.1 additional sidewalk reconstruction tied to that contract item number 1 here as a additional phase. If I was to go into my change management, I could actually find that cost, that particular change order. So before I go on here, what I like to do is I say, hold on, I don't have everything hunky-dory. I'm not going to even start on this. I'm going to clear my projection. I'm going to go up to tasks and clear projection. I want to clear this particular cost projection. Say yes, close this. Go back into my projections folder, PM projection codes. And now, although I have these 6 here, I'm going to go up to the task menu and create projection codes from phases again. It opens the same box. I'm going to hit start. It's going to process 1 of 1 projection code, and it's going to add this projection code here to my projection codes with the cost types and phases for this. One other place that this can happen, even when you haven't written a change order, is if you when you originally started the job, you planned on subcontracting it, and then you ended up working on it. Your own labor force ended up working on it for a time. Then you would have added possibly the cost type labor or burden to your phase and cost types, and you would have to add those to an existing projection code. This creating projection code from phases will do that for you. So it'll add those additional things in there for you. That could also happen. All right, now that I've added my change order projection code, I'm going to come back in here, hit T, 21026, type it in here. I'm going to hit never, hit initialize, and it's going to bring everything in. Now you can see that I have additional sidewalk reconstruction. It's the only one in here that's not yellow. Yellow means that I previously plugged this value. I previously plugged this value. I haven't plugged this value before because I didn't project it before. It wasn't something that was available to project. All right. Now I can actually come in and I can start to estimate how much I'm going to actually spend at the end. I'm going to redo my projected final cost. So here you can see my mobilization. Here you can see how much I've actually spent. And here you can see what I expect to spend remaining or over under a projected final. These 3 fields are all linked to each other. And so if I type 4,000 here, then you can see my over under cost goes up, my projected final cost goes up. If I come in here and I say my remaining cost is 0, then you can see my projected final cost becomes my actual cost. I'm under cost, that's compared to my current estimated, and I have my new projected final. Well, turns out I do actually have a little bit of mobilization to do, or rather demobilization, which I have to do on this. I expected to spend $1,000 on this job to do here. I have some project temporary traffic control. This part of the job is going swimmingly. I'm only going to spend $10,000 to complete this job, even though I estimated 31. Manhole reconstruction, I think that it's only going to cost me $15,000. And mobilization on here, I have another 1,000 on this particular part. This is 1A and 1B. You can see this is the sewer, this is the storm portion of the job. Project temporary traffic control, similar to above. This is going really well. I expect to only spend $1,000 to be under on this. And manhole reconstruction storm, $12,000 to complete that side. 12,000, not 120. Okay. And then I had this additional sidewalk reconstruction, which I estimated to spend $2,000. Now that I'm actually into it a little bit more, it's likely to cost me $2,500. I was a little bit aggressive on that one. Okay. So you can see that once I've typed in my remaining costs, I have my projected final cost. Down here at the bottom, it says $102,000 that I expect to spend. That's $16,000 under my current estimated cost of 119. This means I'm coming in underneath my estimation here. Okay, that's great, but how do you actually estimate here? I mean, for purposes of a demonstration like this, I can just make things up. But when you guys are out there doing the real work, then you're going to have to do a lot more figuring, a lot more. It has to be a lot more thoughtful when you're coming in and estimating your remaining over under a projected final cost. How are we going to do that? Well, one of the ways that we're going to do it is by coming into things like this manhole reconstruction sewer and going to the phase cost type tab. So in the phase cost type tab here, you can see that I have that particular phase broken into its component parts. Here's my original estimate, 32,013, 8,800. So labor, materials, and equipment in order to complete this. And you can actually see where my actual cost has come. You can see that my actual cost has some burden in there, which we estimated the burden inside the labor. Okay, interesting. We have our remaining cost, and it's like, well, wait a minute, where did this remaining cost come from? Well, where this remaining cost came from was when I typed in $15,000 here. Let's just type in something crazy. Let's just say $100,000 remaining. When I type that in here, it spreads that remaining cost out over all of the cost types within there, and it just does it with a weighted average. But that's not actually very accurate. What we might prefer to do is say, hey, I want to estimate on this particular item, I want to estimate it on every cost type. So instead of doing it on the grid originally on the projection code, I'm going to come in here to the phase cost type and I'm going to estimate it here. I'm going to come in and say, for my labor, I expect to spend $7,000. On my materials, I've spent everything I'm going to, 0. My subcontract is 0. My equipment is going to be $7,000, and my burden on that $7,000 is going to be $1,000 for my total of $15,000 here. So I've spread that out more accurately here, and then we can see where I'm over or under on individual items. You can see that my two labor items, labor and burden, is negative 1,000, 4,000. I'm actually over on my labor, but I've saved so much money on my materials that the job as a whole, or sorry, the phase as a whole is under when I look at my final cost compared to my estimated cost. Okay, cool. I'm ready to go back to my main grid here and continue on down. So I can go to each of these and I can dive in additional sidewalk reconstruction, sorry. I can come in here and I can do the same thing on the individual cost types here. Or I can just do it on the main screen. Okay, well, you've seen me several times now when I'm switching back and forth, quickly scrolling past these blue items. What are these blue items? I can hear you asking, Michael, stop. You're scrolling too fast past the blue items. What are these blue items and what are they for? Well, these are all talking about units. So what I've done is I've created a layout that shows me how many units I'm actually going to complete, or how much I will complete compared to how much I actually will complete. So you can see here I have 26 manholes to actually complete on this particular phase. And you can see here that I have actual units of 0. That's because I don't have any progress entered in, either through the key style progress entry, the portals key style entry, or into JC progress entry. I don't have any entered in. And so this isn't going to be super useful for me when I'm actually doing my projections. But if I was to know exactly how many units I have to do and how many units I have done, I can use that information to estimate my cost much more accurately. This is especially useful when I go down to the detail window down here. The detail window shows me a lot of information about this particular item. This first table here, although it looks like just a bunch of numbers, once you start playing with it, really can make a difference. I like to see here, this first column, current estimated units is 26, and my hours is 160 hours. My cost was $32,000. That means my unit cost that I estimated at the beginning was $1,234 per manhole that I was going to install. Now I can say, if I have entered in my projection units, or maybe I just know because I was just walking the job yesterday, that my actual cost is of 23. That it allows me to see how much my it's going to be on my final. What I can use this information to predict how much I'm actually going to spend. I've installed 13 of the 26 manholes. I don't expect it to go any better on the last ones as they were in the first ones. So I'm probably halfway done with my labor. I can use this field and I can actually type in this information and return this to the field below. This little caret here, if I click on this, it changes this bottom row, hours per unit, man days, cost per hour, or units per hour, or hours per unit. These last two, units per hour and hours per unit, these are productivity measurements. If you guys are using like the earned man hours thought process, you're doing that kind of thing. That earned the number of units you're getting installed per man hours can be really, really important. This is especially good for people who are labor driven. Sometimes your specialty subs. I know we have some people on here that are plumbing companies, some people on here that are electrical companies, and I'm sure there's a lot more specialty subs people who are very labor driven. This number of units that are being accomplished per hour can be very important. This field allows you to do some math and return then in those fields into Vista. One of the other things that this can do is if we go to the materials here, cost type. So I'm inside of the grid in my manhole reconstruction sewer. I go to my materials cost type and I click detail window. If I go to my cost tab here, you can see that I have the AP entry, all of these AP entries that are entered in for this particular thing. So here we go, Harbor Freight Tools, credit card transaction, Western Materials, concrete specialty supply, right? Specialty concrete. And I can actually double click on these or click view attachment, and it will allow me to see the invoice itself, except for if you're on the test system. I should know that by now. Don't click that button on the test system. On a live system, you click view and it will actually pull up the PDF of this particular invoice. This also allows you to see what is coming through on here. The reason that I have the contract analysis drill down on here is I often 210026. I often see people running this particular report on one screen while they have the projections open on the other. They're trying to understand, okay, this is my actual cost, but what is actually made up of my actual cost? And they're drilling into things like the same materials here and looking at how much their actual cost is for, the Whirly Gig, the Harbor Freight Tools, right? Concrete Specialty Supply. So they're drilling into these particular invoices right from here. So that contract analysis drill down can be very useful, as well as this report, the AB jobs and work order transactions drill down. Back to the cost projections then, I can see that from here as well. I also can make notes for myself, and I can put in some projection detail. Projection detail is usually only used in very long, complex jobs, and basically it allows you to say not only how much you're going to spend, but when you're going to spend it. So and I don't see this being used very often, although it sure can be, and it can be very helpful. It's difficult to say though which month you're going to spend. It's easier to say how much you're going to totally spend. So the info tab of the cost projection detail window allows you to use this table for math using your current unit and your current hours and your units per hour or cost per unit to calculate your final costs. And the costs here show you how much cost you actually have. Future change orders just show you all your pending change orders that aren't included in your current estimated cost. So we were talking about units here, and you can see that I have the units set here in blue. This is because I have a layout that I've created up here in the top right. So this little grid with a gear on it is our projection layouts. And I've created a unit-based layout here. This is really helpful. If I go and click edit on here, I can create a projection layout that is standard to my company. And you can see here, I put all of the units first, and I colored them blue, because if this particular layout, if we use units a lot, then I want to be able to add them all in here, make sure to show them. And then I added all the other things that I use: current estimated cost, actual cost, remaining committed cost, next, and I'm screwing everything up here, and I'm putting them as shown. I have a lot of information that I can put in here. For you guys who really care about man hours, come in and play around with your actual hours, your estimated hours, your previously projected hours, right? Put those hours in there. Maybe if you put your previously projected hours, your remaining hours, you put your actual hours in there, and you can group them together by dragging and dropping like this. And maybe you can color them, I don't know, maybe a pretty orange color, and say that all my hours are going to be shown on here as red. Let's apply this and hit OK. Let's go ahead and select this. It's going to reload the form. So I'll wait a second here. And now over here, I have my hours kind of shown right here, right on my screen. I don't have to dig into it to see how many hours I've spent, but it's shown directly. My actual hours, remaining hours, and previously projected hours. Then I can have all of my project managers use this same layout here. Couple of notes on the layout. Just because I've edited the layout on this screen does not mean I've edited it here. You can see when I scroll over here, the hours are missing. In order to do that, there is 2 tabs on here that match the 2 tabs over here. So the projection code and the phase cost type. So I would actually have to add the unit-based one here, go in and edit this, add the hours into this, as well as going in and adding it into this one, like I did here. So what I do is I do a projection code one, and then I go and mirror it over when I do my unit-based one. Okay, so projection code layouts, very helpful thing. Finally, the last thing I wanted to show you guys was revenue projections. Revenue projections are fairly uncommon, but they do come up, especially for you guys who are doing the DOT work, where you're doing unit-based contracts, where you estimate how many units you're going to install, but you don't actually know how much over excavation you're going to do, or things can change on the job. When you come in and click your revenue projections, traffic control is a real typical one that will change, right? You're estimating the number of hours that you have. Here in this case, I'm getting paid by the each for my manholes. I can actually come in, I can project how many units I'm going to install here. Let's just say I'm actually going to get paid for 30, and then that will plug $75,000. So I just increased this 30 and increased my projected revenue. So my projected contract went to $150,000. Let's just say that that's the only difference that I have. I can of course go in and edit all of these, but I'm just only going to change that. All I have to do now is close this, and I can come in, I can hit refresh on my screen to see if there's anything that has changed, and now I'm ready to submit my projection. I'm going to give you two other kind of weird things that sometimes can happen. One weird thing is that if you guys are used to using the filter bar in other screens, you can see I have the filter bar open here. That is because I right-clicked anywhere down here and turned on the filter bar, like that. These descriptions don't show up, or sorry, don't modify. So let's just say that I wanted to look at my manhole sewer and my manhole storm, and only those two. They both start with a 3, right? And I can type a 3 in here to get to just those, all right? So I'm going to do my 3 here, and to get my manhole reconstruction sewer, my manhole reconstruction storm. Note I had to do a *3 because of the white space. If I do a 3, it doesn't find anything, so I have to do a *3. Now, note something else that's weird. Projection code 3 is now called mobilization. This is a known bug inside of Vista. It has been for several years. I don't know what exactly causes it, but if you hit refresh, it returns the description back to your projection code. Super confusing for people who use the filter bar. And so I like to show people this. If you're using the filter bar, filter, then hit refresh. I promise you'll be a happier person. Next thing that can be weird is sometimes a similar thing can happen after you update a plugged number. All of these are plugged already. So if I was to update this sidewalk reconstruction here for $3,500, it wouldn't turn yellow even though I just plugged it. The only reason it hasn't turned yellow is, again, you just have to hit refresh and then it will turn yellow, showing that you've plugged it. All right, we have projected our cost, 103,000. We've projected our revenue. With our revenue projections, I'm ready to now hit submit projection. It's going to ask me, do I want to post my revenue projections as well? Yes, I always do if I've changed them. It's going to open up this screen. You guys are familiar with this screen. And you can see that I have my month here as 11/22, and this projection date is 11/15. I'm going to go ahead and validate and post. Batch was successfully updated. Then it's going to open up another batch. This is the, so one was for the revenue, one was for the cost. I'm going to validate and post. And now I've submitted my cost projections in the month of 11/22. And already I can hear the accountant screaming, Michael, that's not going to actually update on our WIP. I know, I'm sorry, but I wanted my project managers to get the all of their cost up to date. And if you need to, what you can do is you can come into JC projections, JC override projections, go to month of 10/22 and pull those projections if they've changed back into an override projection here. I'm not going to go into too much detail on that. You guys are probably familiar with the override projections if you're on this call, and your accountants. Anyway, override projections are what end up showing up on the final WIP, depending on the report you're using. But I always recommend that you give the latest and greatest information to your project managers when they're doing projections. Don't make them sit there and scratch their head about what they spent 2 weeks ago versus what they spent today. Have them do their projections. Have the projections done with the when they come in here and they put in this date with today's date, the latest and greatest. Okay, so we've now created our projection codes in Vista. We even had to update them because of the change order. We added our cost projection, and we also showed how to do layouts, how to add in things like hours. We talked about the detail window, and we talked about how to drill into the phase cost types. We talked about how to use a contract analysis drill down. and I talked about, although it didn't show, this transaction drill down, which you can use on a different screen to help you project your job more accurately. Now that we have our projections done, I can come in and I can run the work in progress report. Let's just run this work in progress report. Oops, let's do the right one, 21026. There we go. My Listexia is showing. And you can see here that I have my contract amount of 150, my estimated cost of completion here, and my actual cost here. I'm 58% complete. And if you guys remember from my whiteboard, $60,000, $63.58 divided by 150,000, that gets me my, what just happened there? 63.58. Wow. Wow, what has happened here? Look at this, you guys. Right on a recorded show, this percent complete isn't correct. Fancy. Because this is not 58% of that. Even I can do that math in my head. So I'll have to look at that. I really wonder what's going on there. Through month is correct in everything. Huh. Well, I'll just do the old hand wavy thing. You guys have all seen this when you got sold on Vista originally. The actual cost is, if we say it's 58% of this, our 58% allows us to calculate our earned to date. We take our billings, and then that allows us to calculate our over under billing. I see. Thank you, Amanda. Oh, I'm glad you're on the call because I was pulling the wrong thing in my hustle and bustle. 30,358 divided by 103,858 is 58% complete. There's no error in the system. There's an error in Michael. That's a lot more understandable. Awesome. All right. Compare the full price of this projection webinar, Ryan. All right. This then 58% complete, that the system calculated correctly, right? 0.5812. We multiply that times our contract amount, $150,000, and we get 87,180, or there's earned to date 87,180. Obviously, I rounded. So you can see, despite me trying to malign this report is doing everything just fine. This earned to date now is only $87,000. We've actually billed 137, so we're far overbilled. This is a good sign. We're overbilled on our earned to date to the tune of $49,000. So we would actually be reducing our revenue by $49,000 on our income statement. Okay, any questions about what I talked about? I'm going to turn this over now that we've seen the final product there of work in progress. Any questions or anything that I need to go over again? You can feel free and raise your hand on Teams and we can unmute you. Otherwise, I can start reading through the chat and go from there. Okay, I'll just start at the bottom here. Scott Wallace, if they use today's date, would this bean counter have to manually plug in all those overrides for October? Yes, Scott, that is true. If they use today's date, this bean counter, I am assuming it is the bean counter you're talking about there, would have to manually plug in all the overrides for October, or specifically all the ones that have changed. It is possible to use a custom button to do that. But you would have to manually plug in those overrides. Now, you can ask me, and some project managers, some controllers and CPAs have asked me, well, how come we don't just have them do the previous month then? Because what I care about more than your time is accurate financial statements. And so what I want them to do is get the latest and greatest information, and then on the accounting side, we have to do a little bit extra work in order to pull those back. So yes, that's true. Now, if you do your projections, you time your projections to be done at the end of the previous month or at the end of every month. So instead of doing projections on the 15th like I did it today, you do it on the 30th or 31st of the month. Then there is no need to do that. So if you can work with your operations department to just do their projections at the end of the month, then it's a little bit easier from your perspective. Amanda, how often do you recommend / mandate PMs to do projections? Certainly once a month. It's an operations question. The head of operations should really be answering this because it depends on the nature of the jobs and the length of the jobs. Are the jobs do they span multiple months? If they don't span multiple months, is a projection even necessary at all, right? How fast do things change on your jobs? Is it very, very, very similar? Is your original estimate actually really, really close to your projected final cost? Well, if that's the case, then maybe projections can be done less frequently. But certainly, I think that all project managers at least once a month should be getting in and doing their projections. I have some companies who do projections once a week. And so they're just going in, they're opening up their projections, they're seeing what they projected previously, they're making small tweaks on all of the labor and equipment type things. And they're saying, the things that there's risk, they're tweaking it with the information. And so it's not very difficult for them to do projections because they're only enhancing it 1 week at a time. But certainly once a week. Second question from Amanda, is there a report to see the date projection was made for each job to see when they're doing the projections company-wide, see any that haven't been done for a while? Yes, there is. What is that thing called? Projections. Let's see here. There's a trend report. Cost estimates. No. I'm going to have to get back to you. In fact, Sharon, if you're still on the call, maybe you remember what that is, but it does show, there was one that showed when the projections were done last. This projection trend report, by the way, is kind of cool now that I'm talking about it. 21026. In fact, this kind of is what you were looking at, but you can see here what the last 3 months of projections have been on this particular job per item. So you can see my projected in November is 1,800. My projection here was, right, it was 1,400. So it grew compared to my actual estimate. Like you can see over time what has happened with your projection. This doesn't exactly answer your question, Amanda, but it does show you the projections earlier. Lane. Oh, hi, Lane. We have always done projections in JC projections. Why do you prefer PM over JC? We are unit cost heavy, so I find JC easier to utilize due to the set, remain, unit cost, and calculate buttons in the footer. So there's a couple things that you're talking about there in the JC. He's talking about JC cost projections here. Where are we at? JC cost projections. If I go into this, and I have to open a batch. This is one of the reasons I don't like it because batches confuse project managers. But this set remaining unit cost button here and the calculate buttons in the footer is what he's talking about. He says he likes to use these when he's putting these in 210026. I can do my projections here. What happens is that it shows me all my phases and all my cost types all on one screen. Some people like this. It also shows my detail window all on one screen. There's certainly nothing wrong with using the JC cost projection. Aha, thank you, Rex. Man, give that man a prize. I'm not sharing my screen. Let me share my screen. There we go. All right. Cool. Here I opened up JC cost projections, and what I was demonstrating to only myself earlier was set remaining unit cost and calculate is what Lane was talking about here, these two buttons. There's this screen that looks here, and then you can see that on my phases and cost types that we have everything listed out on this job. The reason that I recommend you can, and I was saying you can do your projections here, JC cost projections are, it's perfectly legitimate to do it here, to post it and if you're used to this, there's not necessarily anything to change. You mentioned you're the unit cost heavy, right? So you guys are using this, probably using this cost per unit, units per hour, that kind of thing down here, and you can set the remaining unit costs down there. Just as a note, though, Lane, for your so that you can kind of look at this. Let's go into my projections folder and open up my cost projections. A lot of those same 2126. Oh, of course, it's already open in a batch because in JC I opened it in a batch, and I of course didn't close it. So let's go back to JC projections. Cost projections here. Open up my existing batch, and I'm going to go ahead and I'm going to clear my batch. This is the other reason I don't like it, is because clearing batches is not as clean in that side as it is in clear projections in project management. PM cost projections here. Today's date 2/10/26. If we go into this detail window, you get a lot of the same features that you have above, although instead of complete, like the button that actually completes those, you actually have to type in the remaining units. So you can type in the remaining units, like 26 units here. But if I type them in, well, this is a bad example because I picked the wrong code, but you have to type them in instead of actually doing it. But it does do the same math as that complete, and it returns it to the field. So play around with this detail window here, and you should be able to get some of those. We do have a calculate button here as well, which is the same, it does the same thing as your button over below on the bottom side of the JC projection. Okay. Let's see here. Let's see here. Oh, Mary is. I wonder if that's Mary Rosenthal. It probably is. A few of the reports will note the date of the last projection in the header. I've had that date added to most reports that are referencing projection data. That's really good. I like that idea. If you have the ability to add that to them. Sharon Simpson says JC job phase form, not the report, shows a last projection date. That makes sense. Probably where I was thinking about it. JC, so I'm in the job cost programs, JC job phases here. And so we can see, let's see here, it shows a last projection date. Where's my last projection date on here? Am I just missing it? I think I'm just missing it. Cost types tab. Cost type set, thank you. Here's my last projection date. Yep. Cool. All right. Scott, if they use today's, no, we already answered that question. ASA, is there a particular reason to use PM projections instead of JC projections? So we talked about that. Probably one of the biggest things that I like about it is the control that it gives you when you're doing your projection codes here. These projection codes really allow you to pull in those things as you want them and differently every time. It's a little bit added complexity, especially because you have to refresh them, and that can be kind of frustrating. But I do like that ability. I like the fact that we can do a projection based on only the phases and don't have to do it at the cost type level, except for if we want to. All right, and it looks like Tim and Abby and Amanda and Sharon and Asa, you guys were all fixing my mistake with my percent complete. Thank you for that. I happen to see Amanda's pop in. All right. Oh, and Scott as well. Okay. Any other questions on here that I haven't got to? All right. Oh, Amanda, you asked about bringing in those projections into override projections, and Sharon said that you can't answer no, that you can't bring those in. It would have to be a customization. So, okay. Oh, Noreen has her hand raised. Noreen, go ahead. Can we unmute you here? Allow microphone. There we go. You're muted, so you'll have to hit unmute, but feel free to unmute yourself. Noreen's figuring that out. Lane, have you developed any custom job unit cost reports which show projections? So yeah, in fact, I think there's some people on the call that we've worked with on this. There's a lot of different ways to do job unit reports. I don't have any that I can show you easily. But the so earned labor hours and earned costs showing on the same report. We've worked with a number of companies that have done that, and they're all driven based on the units. So, in fact, there's at least one company, I think you guys are here, that has it right inside their key style, and they use that all the time. They have that. They put in their key style how when I say key style, I'm talking about the portal formerly known as key style. So they're putting in their progress units inside of there, and then they go and run that report. It's an SSRS report, right, that they can run right from there, and so they can see how many man hours they had that day and how many units they got done that day, and whether they're ahead or behind on their job, and they're also using that then kind of more on a weekly basis to calculate how much earned cost they have based on their units. And then the project managers use that information to calculate their earned cost. When they're doing their projections, they're looking at that report as well. So it's pretty cool. It does require accurate field reporting of units. So you have to have your job broken into units in the first place, and then you have to have it being reported correctly. Noreen, there it is. It says only I can unmute you. Huh. Well, sorry, I don't know how to. Whoa, that's not what I meant to do. If PMs have done a projection for 12/10/31 and the WIP schedule is created, some minor changes need to be made to the contract for rounding, so you do not have over and under entities of a small amount of a penny. Then when you go back to run the WIP, the projection cost of the WIP automatically changed from the originally run WIP. How can you lock the WIP down so a specific date can be run? So yeah, how can you lock down a WIP so that a specific date can be run? Well, the first thing is that once you run your WIP, print it so that you can catch any mistakes. Print it to PDF is what I recommend. But also close your month. Once you close your month, the WIP can no longer change, Noreen. And you have these when the WIP. Basically, she's saying, hey, what can I do to make it so that my WIP process is easier and doesn't change all over the place? Like I said, use override projections, and then once you've printed your WIP, close the month, and then those WIP numbers won't change anymore. Any other questions? Okay, well, cool. Well, we've used the full hour and a half here. I'll go ahead and stay on here for a little bit longer in case anybody wants to talk. And is there a reason why the projected final changes, even though there were no other projections? So the projected final, so if we go into the PM cost projections, let's make sure I understand your question. 21026 here. You're saying, why does the projected final change here, even though there was no other projections? So in this case, I'm guessing you mean compared to the previous projection cost. Is that true? There was a way to. I did allow the mic there, by the way, Noreen. Yes. Okay. Yeah. So why did the projected final change? There can be a number of reasons that the projection final changed. Of course, the first one is when we calculate here, update projection options, so we can write over our plugged values. And then also the detail projections, we can write over those values depending on what we pick here. If we haven't plugged them, so if we haven't previously plugged them, then the projected final cost can also change, but you should always be able to reference your previously projected cost there.
I'm unmuted now.
Oh, perfect. There you are. Now we can hear you.
So
Great.
In this particular case, we had projections that were completed for month end.
Okay.
I had to go in and make adjustments for over and unders based on penny adjustments.
Okay.
I reran the WIP, it recalculated projected final costs without a new projection being completed.
I see. So it had actually updated this, even though, so it wasn't that this column changed, it's that the column changed on your WIP itself.
That is correct. Is that due to additional actual costs that may have been added, or I'm sorry, future actual costs that may have been added?
No. So if you're doing this work in progress, are you in the one with overrides?
No.
Okay.
We're new to the software, so we've
Okay.
used Landscape. We've worked with Michael
Okay.
Thomas in the past.
Yeah. So so look at the. I would recommend using the one with the overrides, and that gives you as the controller more control. Actually, I don't know if you are the controller. I just made that assumption, but that's often the controller that is running this WIP, and that gives you more control over what changes and when. It will only change those estimated costs of completion. Those should only change when a new estimate was posted. So I don't know exactly what you're seeing, but I would have to look at your particular case. So
okay. So if a change order had been entered, would that affect that column? Is the system trying to change it or adjust it based on activity?
A change order might change that if it was interfaced in the previous interfaced in that month. Yes, before the month was closed.
All right.
For sure. And yeah, thank you, Tim, and thank you, Mike. Yeah, for sure, Scott. I would love to talk to you about that, or Ryan can as well. Reach out to us. Any other questions before we sign off? I know that a lot of you guys have to get back to real life. For a lot of you, this was right during your lunch or right afterward, so I probably put you to sleep. Any other questions? Ooh, someone else has their hand up. Mike, let's allow your mic. I think I allowed your mic, then you also have to hit unmute. Yeah, you bet, Lane. Thanks for coming.
Yeah, this might go along with the previous question. When I go into do another projection, not the first projection, but or another projection, like every month or quarter or whatever. If we choose the never override plug cost, it will still update new posted cost in the new projection if they weren't plugged before. Since the last projection showed the final cost, why are they adding this amount in? Is it because it's not plugged?
Yes, because it's not plugged.
Okay.
Yep. So the plugging it is a way for us to kind of keep control over it. If that's especially important. I mean, I showed you a really simple job with only 6 phases, but when you have hundreds of phases, it can be really confusing if things are moving around all the time.
And that kind of leads into another question I have along those lines. If that's happening, is that because they're committed cost, or will anything that post above and beyond before go into the update the new projection, or is it both?
It's sort of both. If I share my screen again, let's see here. Share my screen. There we go. Do you see my screen?
I do.
Okay, so inside of my projections here, you're asking to make sure I understand your question right. 21026. You're asking what it is that updates this particular column, projected final cost, originally before we plug it. Is that right?
But yeah, when I open up a new projection, I say never overwrite a plug projection. And then when I open up the projection, anything that's not yellow is not plugged. It will bring in any costs that were posted into the system since my last projection and update the projected final cost based on I guess just on progress on the job. My question is it only committed cost, or is it any cost that hits it, like a job cost?
It's going to equal your forecast cost. I'm going to see. I hit F1 here, and I'm hoping to be able to show you here. There's actually a lot of really cool information in here about the projected final cost. But the so F1 is your friend here. It's always going to be equal to your forecast cost, and the forecast cost, I believe. I wish Brian was on the call. Brian would be able to answer this in a heartbeat. I believe that this is the going to use any units that you've entered in and do the math like linearly, basically say, hey, if you've done 13 of my 26 manholes and you spent $3,000, well, then you're going to spend $6,000 to complete the other 13. That's the forecasting ability, and it'll forecast that. So it will include actual costs, and in that forecast, I do not believe it includes committed costs, but I might be wrong on that. If you come into here into the product help, if you hit F1 in here and you look at this particular thing, this projected final cost, this will answer some of your questions, and then also modifying the plugged amount. You can get a lot more information here on how to modify this and how it's spread out.
Okay, very good. I appreciate that. One final question. Is there a way to see the last projection that was posted before you go in to start a new one? I know once you post them, they kind of disappear from the screen. Is there a report or something where you could see what your last projection was?
What your last projection was? Yeah, what was that one here? It's the projection detail here, JC projection detail. And I think actually this JC projections cost, all these three do it. This is the detail for the cost. This is I think the summary. If I do this 21026 here through this month, this is going to be the last one. This is going to show me my projected that I just did here for this. So this shows me the projection I just now posted.
So if I do a projection in PM projections, it'll still show up in the JC projection detail report.
That's correct, because the PM projection just posts over to job cost as soon as you submit it.
Okay, thank you very much. That's my questions. Appreciate your time today.
Yeah, you bet. Thanks for coming. All right, do we get any other questions here? Oh yeah, Rex, good point. There is, and Mike, this is useful too. There is a column here. I had it showing, which is the previous. I put it in my standard layout. The previous projected. Let's see here. Projected final cost, previously projected cost, is the. That doesn't like me when I don't have one in here. Previously projected cost just shows me what I did last time when I'm running this. Yeah, I always have that on for sure. Can you show us the projection report you referenced earlier? Which one did I reference earlier? That was the PM. Am I still sharing my screen? Yeah, I am. I went to the projection trend report here. Not that one. Let's see. PM projection trend 21026 here. And you can see here, this is the one that I had with the November, October, September. It shows me the last 3 months. I think that's the one, Matthew. Cool. Ooh, I like this. Sharon Simpson, can you speak about how to do PM cost projections on soft closed jobs? I'm going to find Sharon on here. And I'm going to unmute. Oh, I think Sharon already left. Sad. I think she already left. Sorry, Kathleen. That would be a great question for her to come in and do. So you're asking about soft closed jobs. If I look at my, this usually happens at the job cost side, but on my contract here, Kathleen is asking about what happens if you do a soft close job, right? So if I go into my 21026 here, and I just go ahead and soft close this job, right? My job is done. And then I come into my projections and I do my cost projections. And today's date, 21026. Then it's like, oh, everything's fine, right? I can still do my projection. I can update everything here, and we're good to go. This projection will post. Everything will be fine on here. I believe. I don't think there'll be any problems validating this. No, correct. It'll post, but it will not show up in my WIP. Unless, of course, I have all jobs, but it won't show up in my WIP. So this, even though I've done the projection, it doesn't actually show up in my WIP. Sharon would be a better, I'm sure would have more on that. Okay, well, I probably should wrap it up here. We're 15 minutes over. Thanks for all you guys who sat it out and listened to the additional ramblings and questions. Thank you very much for coming, and I hope that you guys learned something. And thank you very much to all of you who helped me figure out those random things that I screwed up on. I always like that. Thank you, Rex. Yep, thanks, Simon. Thanks, Amanda. We'll send out the recording afterward. Ryan will send out the recording afterward, Tim. Thanks, Abby. Bye, Holly. Nice to see you again, or at least see your name. Thanks, Tim. Thanks, Kathleen. Thanks, Chrissy. All right. Well, we'll talk to you guys all later.